But let's connect with the corporate voice then. And the management of Dixon Technologies is here to talk about the global supply chain impact, the impact of commodity prices rising on their margins, as well as their strategy going forward. Joining in is Saurabh Gupta. He's the CFO of Dixon Technologies. Thanks much, Mr. Gupta, for joining us today on the market. To begin with, let's discuss the kind of demand trends that the company is witnessing. How are you performing when it comes to individual categories as well? And has there been any sort of an impact of, the commodity price rise, inflation that has hurt your margins? And will you be able to pass on these rises?
Yeah, sure. So the demand looks good. It's basically the supply chain challenges, and you absolutely rightly you said that there have been significant headwinds on the commodity cost. So definitely it impacts our ODM business margins. We have been increasingly passing on those input cost increases to our customers. But clearly, lately, I think so there has been challenge on this China port closures, which are of course major hub for electronic components. And there has been congestion, delay in shipments on account of these closures at China ports, which is impacting our production for the month of April, especially in TV and mobiles. So yes, apart from the commodity headwinds, these are some of the short-term challenges that we are facing. Demand side looks okay, but yeah, our April production in these two verticals of mobile and TV will get impacted, which we are hopeful that should get compensated if the situation in China de-escalates and normalizes soon. If not, then I think so we will have some problem in May and June as well.
All right, fair enough. So, how are you looking at your margins shaping up going forward? Do you believe that you will be? Do you believe that there will be some sort of a consolidation in your margin picture? Because you did talk about how commodity prices being high remains a challenge for the company. So if you could just walk us through what the outlook is in terms of your margins going forward.
So we are very positive that our margin should expand by 30 to 40 bips this financial year as against last year. And the reason for that is, of course, as I mentioned, that we have been increasingly passing on those prices of the input cost increases to our principal customers. Secondly, we are migrating more and more to our own design solutions in every vertical, which has an impact, positive impact to the margins. We are doing more backward integrations. A lot of work is going on value engineering, cost efficiency side. And clearly, the operating leverage benefit would kick in across all the verticals. So we are clearly looking at a growth of almost 65 to 70% in our revenues as against last year. So that would translate into a lot of operating leverage coming into the system in a lot of verticals. And I think so that would be a reason why the margin should expand by 30 to 40 bits this year.
Good morning. This is Nayantara also joining in. There's been, of course, a lot of buzz around manufacturing. There's a buzz around, trying to become Atmanirbhar, the China Plus strategy, which you were just talking about. Now, there is a guidance that has been provided by the company of 17,000 crore rupees for the new financial year 2023 ending March 31st. It's too early to ask you if you're on track with this guidance. Is it, how reasonable is the guidance given the enthusiasm that we're seeing around manufacturing, given the kind of announcements we also see from time to time from the government on PLI schemes?
Yeah, so we are absolutely confident of achieving this 17,500 crores, the guidance that we have given for this financial year. It has just started. Of course, it has not started on a good note on account of the Chinese port closures. But clearly, I think so we have a long way to go. A lot of growth in this year would come from mobile as a category. We are a beneficiary under the mobile PLI scheme. And a lot of other PLI schemes where we are the beneficiary, that would lead to a growth. And apart from the categories, I think so there is an expansion plan in all the categories. So we are confident about achieving these numbers of 17 to 17,500 crores this year.
Right. You've told us a little bit about the demand. We've touched upon inflation as well. But the question is there a lag now as far as price hikes go? Have you prevented from hiking prices? And that is going to maybe then happen in the first quarter of this financial year or the second quarter of this financial year. And will that then hit demand? Because you're going to have to figure out how to balance the two when cost of funds also, for example, are going to go up now.
So basically the way it works is that almost in 80% of our revenues, which is basically the prescriptive portion of our revenues, which we call OEM, So there we don't take any currency or commodity risk. It gets immediately passed on. But it is basically in a 20% of our revenues, which is basically lighting and washing machine, where we pass on with a lag. And you are absolutely right. If you are in a commodity super cycle kind of environment where it is continuously going up, you're not able to pass on the cost completely. I think so. We have been able to pass on most of the cost increases, but my sense is some part of that is left, and every month it is getting better. So my sense is that it will take another couple of quarters for us to pass on those costs completely to the consumer, and hoping that the commodity prices also softens up.
I want to go back to the point that you mentioned that you have to take production cuts on account of the supply chain issues that we are seeing due to lockdowns in China. What is that amount of production cut that you have taken? And if this continues for May and June as well, which a large part of experts are believing that the lockdowns might continue in May, would it shave off your guidance that you were talking about, the 17,000 crore guidance? Would you have to lower it if the situation continues?
Yeah, so we are monitoring this situation very closely. We are, of course, in close coordination with the supplier partners based in China. You are absolutely right. If the situation persists for a longer time, because there is a decent amount of dependency on Chinese electronic components. So yes, if it continues, it can have an impact on our guidance. But as of now, my sense, we feel confident that this situation should de-escalate soon. And we had inventories with us. But yes, 7 to 8% of the production for TV and mobile gets impacted in April, which we are hopeful should get compensated in the future months. But yeah, if the situation persists for a longer period of time, then we may need to revisit our numbers. But as of now, my sense is 1 month here and there, I think so you're able to recoup that in the future months.
Okay, fair enough. Saurabh, I wanted to pick your brains regarding two other aspects. Export is one thing that you said you are quite bullish on and focusing on. In fact, if I remember it right from our last conversation, you had indicated that this is likely to contribute 30 to 35% of the revenues going forward as well. Is that on track? And secondly, on the mobile segment, mobile and EMS segment that is, from the current contribution of 24%, analysts expect that the contribution can jump up to as much as 45-50%. Is that a reasonable expectation?
Yeah, absolutely right. I think so. There will be a significant change in sales mix, the significant contribution coming from mobile as a category. You're absolutely right. 40 to 45% of our revenue should come from mobile out of the 17,500 crores which you mentioned. And within mobile category, almost 60% of that will be exported for an anchor customer to North America market. So that stays. Apart from that, we are really working hard to do some exports in lighting. We expect some major breakthroughs in lighting as a vertical in the next couple of months. Those final stages of safety and reliability audits are in place. So my sense is that should happen. And in another 12 months, 15 months down the line, we absolutely feel confident that even in washing machine segment, the home appliances segment, we should start exports. So we stick to our guidance that in the next couple of years, a significant portion of our revenue should come from the export markets.
You know, we do see some seasonality spikes, right? Since we're talking in the middle of this massive heat wave, 40 plus degrees in New Delhi. I've come to Mumbai where it's equally hot and added to the humidity. What is that going to mean as far as your plans go, for air conditioners, etc.?
Actually, we are not into air conditioning as a category. But overall, what I have heard, it's that category along with refrigerators is doing well. And now we are pouring into refrigerators. So we've started work on our refrigerators, which should in fact go live by start of 2023. So we are getting into refrigerator as a category and creating the largest capacity in India, 1.2 million direct cool refrigerators.
So you ramp up refrigerators?
Sorry, come again?
So you ramp it up to take advantage of the heat wave. We're already hearing, right? Like from Varun Beverages about colas, we're hearing about air conditioner manufacturers.
Yeah, so next year, I think so it should go live. So I'm assuming that next year this demand should be equally good. So that's why we're getting into this category.
So all the best for that, and it's always a pleasure talking to you. That's Dixon Tech for you, which has been making waves of late, has been one of the beneficiaries of the PLI schemes as well. It's been announcing a bunch of joint ventures too.